Hello guys! Big developments are coming out of the world of NIO, and today we've got something massive to talk about. It's not just another announcement, this could be a game changer for NIO's long-term survival and growth. After months of speculation, we finally know how NIO plans to bring in critical funding without resorting to painful stock dilution. And honestly, it's nothing short of brilliant. So buckle up because what we're about to break down may just explain how NIO is setting the stage for a powerful comeback. This is not financial advice. Please do your own research. So let's get right to the heart of the matter. NIO has secured a funding strategy that's both innovative and strategic. Rather than going back to capital markets to raise money in traditional ways or diluting shareholder value further, NIO is doing something smarter. They're spinning off their chip division into an entirely new company, one that's partially owned by NIO, partly by the internal chip development team, and the rest by external investors. That's right, NIO is essentially creating a new independent chip entity and allowing investors to buy into it. Now here's how it works. NIO will retain majority control of the chip company while giving a minority stake to the engineers and developers behind the technology. The remaining shares will be sold to outside investors, and eventually, the chip company will be listed publicly on the stock market. The proceeds from these investments will go directly to NIO, offering them a significant cash injection without touching shareholder equity. It's honestly a stroke of financial genius. We've seen similar strategic moves in the past. Remember back in 2019 when NIO faced a cash crunch. That was when they secured a lifeline from the Hefei municipal government, which literally saved the company. Now in 2025, they're proving once again that their leadership understands how to fund operations smartly and without harming shareholder value. But why is this chip division so valuable? Because NIO's chips aren't just functional, they're highly advanced. In fact, the NX9031 chip is reportedly on par with, or in some cases better than Nvidia's latest automotive chips. That's right, the NX9031 offers greater cost efficiency, energy savings, and improved range capabilities. And we're not just talking about one chip either. This company includes development on multiple chips, including LiDAR processing chips that enhance autonomous driving features. That's where this story gets even more exciting. This chip division is capable of becoming a direct competitor to Nvidia in China's domestic market and perhaps even beyond. Think about it. With geopolitical tensions and export restrictions tightening on U.S. chipmakers, Chinese automakers are more incentivized than ever to adopt local solutions. If Nvidia's chips become harder to acquire, then NIO's chip firm stands to gain a huge market share by offering similar or better tech. And there's more. The potential doesn't stop at automotive chips. If this spin-off grows and gains traction, it could eventually explore chips for mobile devices, IoT, or even cloud computing. That opens up a whole new landscape of opportunity, possibly rivaling giants like Qualcomm or MediaTek someday. This isn't just a car chip company, it could be the foundation of a massive semiconductor business underpinned by real-world, high-demand applications. What makes this plan even more effective is how well it ties into NIO's broader business model. Remember, NIO has been developing everything in-house from its software to its vehicle platforms. Their software isn't based on Android or Linux, it's completely self-built from the ground up, which gives them full control over every aspect of performance, updates, and user experience. That kind of independence is rare, and it adds incredible value to the whole ecosystem. There's even talk of licensing this proprietary software to other automakers, which could bring in another stream of recurring revenue. The same goes for NIO's battery swap technology, which has already been implemented in some Chery vehicles spotted with swappable battery setups. Although they haven't officially launched yet, the infrastructure is clearly being built, and once it's active, we could see NIO's battery swap network become a core product offered to other automakers, much like how Tesla sells access to its superchargers. Now coming back to the chip company, yes, it's technically being separated from the NIO group, but NIO will still benefit in a major way. While it won't own the entire company, it'll receive revenue through dividends, partial profits, and any stake it chooses to sell once the chip company goes public. That IPO event alone could be a huge windfall for NIO, giving it more financial breathing room to invest in research and development, new vehicle models, and international expansion. This also brings us to the dilution topic. For months, there's been concern that NIO might have to issue more shares just to meet payment timelines with suppliers or cover operating costs. That kind of dilution would hurt the stock price and investor confidence. But with this chip spin-off strategy, NIO now has an alternative. They can fund operations without affecting share value. Of course, this doesn't mean they'll never dilute again. If the need arises, they still might go that route. But this move greatly reduces the urgency to do so, and gives them leverage at the negotiation table with future investors or lenders. So what lies ahead? The chip company will continue to develop not just one, but multiple types of chips. The current NX9031, next-gen versions of it, and LiDAR processing chips, among others. This creates a robust product lineup that serves not only NIO, but could also be licensed to other automakers across China and possibly beyond. And once it goes public, the real value of the spin-off will become apparent. Depending on market conditions, demand for local chip solutions, and ongoing tech development, this chip firm could become a cornerstone of NIO's long-term financial stability. It might even outgrow the car-making side of the business in terms of profitability. If the spin-off performs well, don't be surprised to see NIO reduce its stake slightly more to unlock additional capital again, without touching shareholder stock. The broader implication here is clear. NIO is now evolving beyond just an automaker. They're creating an ecosystem of products and services that includes energy infrastructure, autonomous tech, proprietary software, and now semiconductors. That makes them much more than just another electric vehicle brand. It positions them as a full-stack tech company in the mobility space. So to wrap it up, NIO has made a brilliant move by spinning off its chip division into a separate, investor-backed company. This strategy secures funding without diluting stock, gives NIO access to capital through future public offerings, and unleashes the potential of a chip company that's already producing hardware to rival Nvidia. With in-house tech, battery swap licenses, software offerings, and now a semiconductor strategy, NIO is quietly building the pieces of a sustainable, high-margin, long-term business. And honestly, this might just be their smartest move yet. If you're an investor, enthusiast, or simply curious about the future of electric vehicle tech, this is one development you absolutely want to keep an eye on. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.